Good morning, folks, and welcome to another episode with Felix Frey. Today, we're going to talk about the common options mistakes and how to go ahead and avoid them. Felix, how's it going?
Hey, it's going great. How you doing?
Doing well. Let me go ahead and put up the disclaimer. As always, folks, anything that I mention, anything that Felix mentioned is our opinion only and not representative of TradeZero. Always ask that you do your own due diligence. Felix, what do you make of the market here so far?
It's feels heavy. Feels a little heavy on the tech side. We keep going back to that story, and OpenAI and Dropik look like they're trying to incentivize people to take on those tokens. So that
Yeah.
they're giving, the news out today is basically dropping prices. The Micron semiconductor sector, we talked about that last week.
Yeah.
1100, it's down 20% from there. So it's all a little bit heavy there, but on the other side, on the flip side, the S&Ps, I mean, we're close to the highs, right? So the S&Ps, outside of tech, AI starting to look better. Healthcare, defense, but I think that'll pick up. Builders, all these things are trading okay. Was it a tale of two different stock markets?
Yeah, the markets are currently down. The SPY is down about 0.34%. The Qs are down 2%, kind of like we were referring to as well. And even your other kind of heavier stocks, where your hyperscalers or other growth names, you've got SpaceX that's down 6%. You've got Nvidia that's down only about 1%, and Robinhood that's about 2.5%. But there's some stocks as well. Um, what's the IV looking like? Like, what's the VIX looking like compared to what it typically is on a time like this?
It's up a little bit, but it's not like elevated to the point where people are thinking panic or whatever. Like I said, we're pull back, you pull back close to the highs, all time highs.
Yeah.
So people say a healthy pullback is always good in a bull market, right? 5% down is nothing when the things are moving 30% a year. So people are not making a lot of it right now. The big question is whether or not the semis can hold. And this rotation, maybe there's rotation. We talked about the hyperscalers were down and the semis products were up, the check writers versus the check receivers. That was last week's conversation. I said, hey, look, if you're an investor, you'd probably start looking at this going, this is too much. The Microsoft board, Microsoft's up 30 points in a week,
Yeah.
so I just think it's a rotation out of what was working to, hey, this has gotten too cheap. Like, who are the winners? And that's what people are trying to figure out. So it's difficult there week by week. It's a new, this group is the winner. But I think the hyperscalers caught this bid. I think software is not going away. Like everybody just, they fraud in the last 6 months. And so that's what you're seeing. But, again, I showed you Merck last week.
Well,
Look at the Johnny John, Bristol Myers. Look at all of these ABBV. They're all starting to look better. We got into some builders. SpaceX may not be the one, but look at LIN. LIN is there in the supply chain. One of their suppliers, stocks breaking out. So the market's trying to find new pockets where the next flows will be the next big story.
I've got like a couple of, I was looking at HubSpot to kind of possibly have starting an investment, and that's been kind of bouncing off of the lows. Bounced off of 173.88, now trading at 203, and possibly can go ahead and activate a double bottom, but it's still got about 40 more points to go on the upside. But yeah, software names are getting killed. Some people say it's a generational buy. Some people say it's just going to go ahead and continue to the downside, cap bounce, whatever the case may be. So, all right, sweet. Let's kind of dive into it, right? There's a few different ways that I want to approach this. One of them will be from like a very obvious common mistakes. Then we can talk about mistakes in terms of position sizing, mistakes in terms of the mechanics, and mistakes in terms of strikes and expirations, and trade management, different things like that. We may not have the time to get to everything, but let's kind of start off with what is the biggest mistake, right? You have individuals that talk to you that look for mentorship, that you have conversations with. What is the biggest mistake you see options traders make?
I think it's simple. It goes back to what I'm always talking about is they spend so much time on the Greeks and so much time on trying to understand how the Greeks work together and this 5-dimensional puzzle. And it can get confusing very quickly, especially if you're not really profiting from the Greeks, right? Essentially, for sellers, it's okay to understand IV, but getting into the Greeks it can cause problems and a lot of confusion. For buyers, IV is just a gauge, and really, you just really need to focus on risk reward. So I think this focus on the Greeks, and every YouTube video is talking about the Greeks, and how, if gamma moves, we're having the delta, and delta moves, we have the theta. It's a 5-dimensional puzzle. It's like really, really difficult to figure out any one of those simple, call it simple questions. It's not simple. And frankly, when you think about it, you're not profiting from the Greeks generally.
Yeah. And now typically when it ends up in that aspect of it is also like position sizing. So let's kind of get into that. What are some mistakes that you see around there?
Position sizing is important. So I think, after, talking to thousands of people over the years, people are definitely trading too big, right? They're trading too big. So, and how I can prove it to them is by looking at, just say, show me a scroll of all your trades. And we can see that, when you're buying options, you're taking like 30-cent wins. And when you're losing on the option, you're taking like 30, 50-cent losses. Maybe you win a little bit. That's going to be hard to win over time, right? It's difficult. So what I'm saying to them is the buying part is built for leverage. You're trying to make the 100, 200, 300% returns. That's what you're trying to do. But yet you need a plan, which is a whole nother problem. You need a plan to kind of capture that. And so sizing is important, because when you're buying something for $1, and say you spend $1,000, you're expected to stay in that position to at least $2,000 to try to get 100% win on that.
Yeah.
And if you think about the average investor, by the time they get to 1,500 and it drops $300, that $300 is meaningful, too meaningful for the trade. So if you started with 500, then that move from near 1,000 back down is only $150, $200. It starts getting less and less meaningful, because you need to be able to withstand, and it will happen, that volatility of the P&L. And that's where I show people you're too big. The P&L, not now, not today. When you're winning, the P&L is going to be too big for you to like stay in and where you should be staying in.
So much of trading is a art versus a science, because it all depends on the individual, the amount of money you may have in the account, and yada yada. What would you say is a healthy, right, percent of a portfolio to risk when someone gets in a trade? And here's how I want to preface this. Sometimes what people think is, just for easy math, hey, I have $100,000. John Doe told me to risk 2%, so I am going to get a $2,000 options contract directionally, and I'm going to let it go to zero. Versus someone else saying, I have $100,000, I'm going to risk 2%, therefore I'm going to get into a $10,000 position, but if I'm down 20%, I'm going to go ahead and quit. Different types of trading, different position sizing, the risk is there. Discipline obviously is, hey, zero or nothing.
Yeah.
But keeping that pretext in mind, what's a healthy way to go about it? And what percent of the portfolio would you suggest?
Sure. I always tell people, really, whether you have 10 grand, 20 grand, 100 grand, I tell everyone, that's like saying, you have a young kid in college doing really well in sports, really well in baseball. And, he can be the best in college, right? Have the highest, ability. And you stick him in the minor leagues, and he starts seeing the 102-mile-an-hour fastball some of these kids are throwing at that age, 101. He's not hitting that ball at first, right? He's got to see that speed. So what I tell people, first thing first, whether it's 10, 20, 100,000, get comfortable with $600, $500 per trade, And when you have $1,000, $100,000, it probably should be anywhere from 2 to 5%. Right? No more, 2 to 5% per trade. But, and 5% when you have like a $10,000 account is probably better than 5% when you have a $100,000 account, because then you're $5,000 a trade where that's a 100-mile-an-hour fastball, $5,000 a trade, and it's moving quick. So the dollar amount actually matters just as much as the percentage amount for someone getting in the game.
I'm looking. Yeah, it does. I'm looking at a couple of different things, because I think what also happens, and I know I've dealt with this, and I still sometimes do, is people don't want to take a loss, because one, psychologically, you're telling yourself you were wrong. Two, we also are so afraid that the trade is going to bounce back and go the other way, and that we were idiots for closing it out for a loss. Any tips on how people can kind of deal with
Yeah. Yeah. The option's not the problem. The problem was the signal or the entry, right? So people say, and the sizing with the plan. So people say if your percentage if your percentage of exit, your stop loss is too small, you're probably going to be knocked out a lot, right? So if someone says, I'll just take a 20% loss. 20% might happen literally in 3 minutes, and then it rips higher. Remember, we said you can't pick the bottom, you can't pick the top. And so, the leverage factor in the options makes those percentages real fast. So you think, oh, well, 20% is a big move, or something that's big in stock terms. But in options terms, 20% can happen very quickly, and likely does happen because you're going to be wrong 98% of the time on your exits or entries, on your ins, your buys, and your sells. So you have to leave enough room. Okay, what is enough room? I say 50 to 60%. That gives you more than enough chance to realize I was wrong, right? The entry was wrong, not the option. The option is just, you can't blame the hammer, right? When the hammer, you picked a small hammer to knock down a huge rock, right? You need a bulldozer. So it's like, it's not the bulldozer's fault or the hammer's fault. It's the fact that you chose the hammer when you needed a bulldozer. So it's more about the signal, about the chart you're looking at, or whatever it is that you're looking at, saying this was my entry. Well, that was wrong. So you got to fix that. Forget about the option is probably okay if you got that right.
I'm taking a look at a couple of other different kind of topics in this aspect of it, but I agree. And I think I told you a mistake that I made.
Yeah.
I think it was last week. I told you maybe 2 weeks ago about the SpaceX, how I played it kind of completely wrong. On, it hit the target, but it hit the target next week and not the week that I had the expiration for. And I kind of misplayed it there. But moving on from that, let's get right into the strike and expiration selections. What are some common mistakes you see folks make there? And of course, how can we avoid them?
Of course, it goes to. I would say the mistake is that people don't appreciate, especially buyers, they don't appreciate what cheap really means. So they look at options and they choose a strike with, 30-cent options or 40-cent options because it's cheap. But cheap in mathematical terms could be very expensive, right? So you actually buy the most expensive option on the board. You don't realize it. You think it's cheap. It's because it's a low cost. Low cost does not mean cheap in options. And that is a big problem that, I'm constantly trying to help members, help anyone who speaks to me about options, is don't fall into that trap. You're looking at dollars, but you can't relate a $5 option with a $4 option with a $3 option and $2, because they're different strikes which carry different probabilities. And so you have to do a little bit of math, which is what I show, to say, oh, this is how you compare, to normalize everything, right? And say, okay, this is the normalization process, and now you can look at it in this fashion. And now that option that you thought was cheap, I'm showing you, look how expensive it is. Okay, so that's strike. That's one. Two, expiration. Expiration in options, when you're buying, you should have a. I am looking for this moment, for the value of the stock to change in some way. So, for example, in earnings, I think earnings are going to be much better than expected. Revenues, earnings, everything, and that's going to release, more buyers, allow more buyers to come in, and that's going to cause a little bit more momentum, and that's going to get this breakout, which eventually move the stock towards this level. So you need that event to say it's going to unlock something.
You also have so many individuals that love, and you brought it up, the zero DTEs. They love it. Or they love far out of the money. Like, oh, earnings is coming out, stocks at 700. I think it's going to be amazing. I'm going to buy the 900 because it's only 50 cents. Well, there's a reason it's only 50 cents as well. So in that aspect of it, would you tell individuals that are just starting out to trade options to just stay away from zero DTEs or certain type of things? Like, what would you kind of get them with their feet wet?
Yeah, look, I would definitely stay away from zero DTE, and buying, selling options quickly. I mean, you're talking about, what's the guy in the Milwaukee Brewers, Miz? You're trying to hit his fastball. I mean, it's like fast. It's a fast game. Like, you're picking the hardest game to play, right? Start with 1 month. Tell me what you think is going to happen with Apple or with these, the market in a month, and spend low, especially if you're just beginning, spend a low dollar amount. Buy one, watch it, watch what's happening, have a plan. I'm going to get out at 50%. Understand that if you're wrong by 50%, the stock really went against you the wrong way. So if the option's wrong by 50%, that means you were really wrong on the stock, which goes back to, I keep telling you, it's not the option. Don't blame the option. It's the signal. Okay. It's the signal. A lot of people don't want to hear that. They're like, oh, I just picked it. It's the signal, right? The signal that you are relying on was wrong, and it's going to be wrong. These signals are going to be wrong sometimes, you know, 54% of the time, but when they're right to 46%, it's a great signal for a big move. That's how the math works. So it's focus on, make sure you're focusing on each point, like we're doing, has its own little problems, but people like to blame the option too much, and the strike that it's really the signal. The strike that you pick is very important, and there's a process there. Can't figure it out right now, but there's a process there, and the biggest mistake is to thinking that an option is cheap because it's low cost.
Yeah. Do you still do you ever go on tilt yourself? Obviously, you've been doing this for many, many years. You worked at hedge funds, everything's at professional level.
If you're human, you go on tilt.
Like, well, I guess let me ask you this. Let's have a little story time, if you don't mind. Like, tell me about a time that you might have kind of gotten on tilt, and how you, more importantly than that, just like how you kind of deal with it, since at the highest level, you still deal with it yourself.
The best one, this was really bad. I got into an Alibaba short. I will always remember this guy. I freaked out. Alibaba short. This was years ago, but stock was way up, and I was on vacation. Okay, so I was very, very bearish on Alibaba, very bearish, and I bought some puts, 1 week puts, like 3 days left, and I was on vacation. I was like, a bit by the pool, whatever. I'll stop myself, whatever. Jack Ma announced that he was selling the stock. Big news, like huge, out of nowhere. I had massive amounts of puts, and the stock was down $15 or something like that. Maybe it was like overnight, and it was only like I had literally like $2 options, and the stock was near like close to where the stock was. The stock was on 15, 16, 17 bucks or whatever it was. And I had a decent amount. And I couldn't believe it. All night, I'm basically so excited. I'm like, wow, this is amazing. I'm on vacation. It's like, this is what better life than that. I wake up nice and early. I'm going to get out of these things. I'm going to take some profits. And at 9:30, I'm at the hotel. And the internet goes out. The internet was like, it went, and I was like, my screen froze. Like, this is a joke. This is a joke. So I'm like frantically trying to get internet. I can't get internet. I can't. And when I opened it up, the stock was almost unched. Okay, so I wound up losing. But I wound up losing almost everything. And I'm like, I was just up a lot of money, a lot, and I could not believe that. I was in shock. I was like, I can't believe that. I was like, is this a joke? Is this a joke? The stock continues to go up. I actually take the stop. So now I don't talk 6-figure numbers. Okay. 6 figures. Okay. I take the stop. I actually lose money on the trade. Take the stop, and I close my mind was absolutely it was like all over the place. So I'm like, should I get back in? Should I get back in? And I'm like, no, just stop. I stopped. Got out, basically went to the pool, and with my wife now, but we weren't married yet. Went to the pool. I was like, all right, let me forget about it. I went back. The stock was down 20 when I got back. I was like, so it was literally like, I got stopped out with a loss on making a lot of money. The electricity of the internet came back on. I see that. I actually have to take the stop, and then I actually close the book. I do the right thing. I'm on tilt. I feel that I'm on tilt. I'm about to blow a lot of money, and I'm like, let me just shut the computer off. And then by the time I'm at the pool, I couldn't help but look. An hour and a half later, I was like, let me just see what happened. It was like down 20, and I could not. I mean, wanted to puke, and so I stopped for about a week, and I just didn't. I couldn't believe what just happened. I couldn't believe it. I just couldn't believe it.
Dude,
That's the story.
I cannot imagine, especially being on vacation.
I swear to you, that is exactly how the story went. 'Cause I still remember it. Like, I feel it like it was yesterday. Actually, I think I'm on tilt now just thinking about it.
Well, we're done here in a few minutes. Well, you know what's crazy is that type of event, if it happens to anyone else, and maybe your mood as well, is it messes with your mood with everything else. It can ruin your vacation. I can tell you from a personal experience that my girlfriend at the time would know if I have lost money because my mood would change by lunchtime.
Of course, of
Because then
course.
when we had date night planned, I was excited. I didn't care. I almost cursed there. I didn't care. You know what I mean?
Let me tell you before we leave. I'm going to tell you one story before we leave. Okay, it's not just. It doesn't matter if it like. I'm not even the top hedge fund guy. There's a top hedge fund guy. He was in. I was on Wall Street. I was working. I covered the guy. He came in, big house in Connecticut. I mean, big guy, right? So he's there. I invited him in. We're talking, and he's talking about his. He was in a stock, and he had a lot of guys in the room of stock. And I'm like, hey, the stock is getting killed here. What's going on? He was there, and he was like, really? And he walks over, and the stock was getting killed. And I was like, I'm looking at him, and I see his face, like, you know, picks up the phone, and he starts screaming at the construction. It was some construction guy. Stop the pool! I want you to stop the pool right now. Just stop everything that you're doing. And I'm laughing, and I'm going, that guy just saw the stock, and he's like literally freaked out. He's calls his wife, cancel this, cancel. I mean, yeah, the stock was getting. It was one of those where like the news came. It was like a biotech, and the stock was like down 80%. And he literally was like, "Stop this, stop!" He was frantic, and so even he's a top guy. Millions, tens, and hundreds of millions of dollars at the time of a hedge fund. So even they do it. And another guy, I think I might have told you. I'll tell you in 30 seconds. Seller. He was selling options. He was long Goldman Sachs, and he was short this net bank. It was an internet bank when the internet was gone, 1999. He's like, how can this stock be worth 3 times what Goldman Sachs is worth? It's like not even anything. It's like a website. And I was like, I know it's crazy, but things can get crazy. So this guy kept selling calls. He was screaming to me on the phone every single time he called. He's like, how is it possible? It's now worth 7 times Goldman Sachs or whatever. I'm like, I don't know. You're the expert. You're the guy that knows all the banks. I don't know anything about this net bank. You're the one that came to me. And he wound up losing. He had like an $80 million hedge fund. He wound up losing the whole thing. He lost $70 million on one trade. The stock, he was selling calls. The stock went from 70 to 250. By the way, he bought the top, literally the top. He covered. I always remember this too, because I said he must have been like on some tranquilizer or something. He stopped yelling. He was like, he literally just said over the phone, just buy them back. Just buy them back. Thank you. And I was like, okay. The top, I could tell you to this day what the top price was. That's how I remembered. It was the top. It went from 256 straight down to $100. And it within like 24 hours, 48 hours, it was like boom, boom, boom. And he was the top. How did that happen? No idea. But I've seen crazy things and hedge fund guys blowing up. I mean, Raj Rotten, the guy who went to jail, screaming at me. I mean, through the phone. I'm holding the phone like this, and he's screaming, like the spit's coming out of the phone because he didn't get some allocation and some this and that. He's gonna ruin my career. I'm like, okay, quick, yeah. It's like, but I mean, so these guys, they're animals too, and they can get tilted as well. And the best thing to do, literally, they just storm out, walk out, and don't touch anything, and just And by the way, people who allocate money, if you're a hedge fund and getting a divorce, there's a lot of people pull out the money. Why? Because the tilt is a real thing. So allocators, billion-dollar allocators, they say, oh, he's getting divorced. We got to pull back the money. We don't know, his mind is not in the right place. So yeah, it's a real thing. The point is, it's a real thing.
It's the same thing when cops are in financial distress. It's worrisome because you're more prone to, say, bribery or different things like that. Of course, there are other professions similar in that aspect of it as well. But yeah, man, it's a real thing for sure. Like I said, I've dealt with it plenty of times. And I will
at all levels. I'm telling you, I've seen it at all levels. So you're human. Everyone's human, and it happens. But the electricity going out, the internet going out, and then coming back and whips on me like that for 6 figures, I can't. I've still, now that I think about it, I was like, I can't. I remember exactly where I was. It's funny how you can just remember those moments.
My other webinar, I can talk for about a couple of minutes. I was in New York City. I was long Tesla, through options. And I was, for me, I was up maybe call it 7 grand, which for me was huge because my account was maybe like say 30, 40,000 at the time. And so it's huge.
Yeah.
And my girlfriend and I at the time, to celebrate our anniversary, went to New York. And I remember feeling like such a badass because I sold everything right across the street from Wall Street. So it was like, here is my Mecca, if you will, financial system. Sold it, had an amazing time. Everything was great. Came back to Atlanta. Stock just continued going, right? That 7,000 would have been 14, would have been 13. At the end of it, it would, because I still have time left. At the end of it, it would have been worth about 40 grand. Of course, I don't no longer care about the 7 grand I made. I care about what I just missed out on.
Yeah.
The next time I go ahead and get into Disney and I go ahead and it's up like say 6,000, I'm making good money, but I don't sell because I'm thinking, oh, with Tesla, I missed out. I'm definitely not with Mickey.
Of course. The one mistake.
COVID comes back down. And I'm like, okay, sure, things are closed for a couple of weeks, yada, yada, yada. They'll open back up. No worries. Nope. Just pop, 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 pop. I remember I went to get Chipotle and I had equity too. I went to get Chipotle. I was down, I don't know, call it 7 grand. I bought the food. I checked my phone. I was down 11 grand. I drove back to my house. I was down 15 grand. It was like the most expensive Chipotle ride I've ever had.
Exactly.
It goes back to, I would have never done that if I didn't deal with the nonsense with Tesla. Completely different ticker, completely different trade, a trade that I was profitable at, by the way.
Yes.
And, it hit my P&L, but it was just the aspect of like, oh, that I don't want to feel that again. So then I just held on to it.
We should talk about this next time. There's a lot to learn in this stuff, and you only learn by hearing people's stories and understanding. But yeah, I mean, I'll leave you with this. Go watch The Big Short. Go watch The Big Short. The guy made $1 billion, and the question I'm gonna ask you is, did he make a mistake doing it? Most times when people make the most amount of money in their career, you would ask themselves, man, you risked a lot there to make that. The most money I've ever made, I couldn't sell. It's so funny too. It's another good story.
You don't have the liquidity on the other side?
No, I couldn't. No, I physically couldn't sell. I was on an airplane, and back then there was no internet. So I was on an airplane like jonesing, trying to figure out what's happening, and I couldn't sell. And that was the only reason why I made a lot of money, because when I got out of the plane, I was like, ding, 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 like, oh, this is amazing. I'll tell you that story next time.
The dumbest thing that I've ever done, I was on a flight this is when I used to work for Benzinga. I was on a flight from Atlanta to wherever our conference was. I think it might have been Miami, it might have been Chicago, I don't know, it was somewhere. I'm on a Boeing flight. This is where Boeing had a few flight issues. The plane's coming down, and not even just dying, but just, maintenance issues or whatever the case is. I'm on a Boeing flight. We take off 15 minutes into the flight. It's a Delta flight. It starts doing this. I kid you not. It was like a seesaw battle. And I work for Benzinga, which is a financial media company. And so I'm immediately thinking, I'm not even afraid for my life. I did 2 things. One, I sent a Slack, so I had Wi-Fi. And I said, hey, Boeing, this flight, maintenance issues. We're turning around and we're headed back to Atlanta. Source, trust me, I'm on the blame. That's the first thing. The second thing I did was I bought puts.
Just in case.
Well, it's one of those things where if I die, what are the puts going to do for me? But it was a trader in me, so I bought a couple of puts. And then the third thing I did was I texted my loved ones, and I was like, hey, just in case. Lo and behold, the puts were a little bit in the money, but at that point, it was just the dumbest thing I've done. And is that insider trading? I don't know. I was the source. I plugged this up myself. This is probably going to get cut from the edit, but it's the dumbest thing I've done where it's like,
I think we'd have a podcast.
Let me buy out a true version of me as a trader. Let me trade true to who I am.
Fantastic.
Oh, man. Always a pleasure, Felix. Mark, Mamba, great. Appreciate you guys for tuning in as well, and everyone else watching. All right, Felix, we will catch up with you next week, brother. Thank you so much.
Take care. All right, be good.